let's take a look at the total addressable market for Bitcoin, right? So if we think Bitcoin is really in the arena to compete with other assets that have been monetized, that have been used as a store of value for many, many years, where can it go? Stocks around $100 trillion in market cap, bonds 130 trillion, gold a little bit more than 10 trillion, right? Real estate, the big one, the elephant, it's 300, anywhere between 300 and 350 trillion. You have other markets that have been monetized, like fine arts, for example, that's another almost $2 trillion. So if you add all of these up and you compare to Bitcoin, Bitcoin is roughly $1.5 trillion in market cap, right? So there's massive amount of room to expand. The total addressable market, it's still orders of magnitude of where we are right here. Let's use the case of real estate, $320 trillion, right? So let's call it 300 trillion to make it a round number. So let's assume, for example, when people can change the assumptions at the model, let's assume that half of that is due to monetary premium. So half of the value that went into real estate, it's not because people wanted to buy real estate to live, because they thought it was very good real estate that they're buying, you know, but because they needed to park the capital somewhere. And I don't think that's a bad approximation if you think about the number of assets in terms of real estate that are out there that people really live on there, and compared to investment, there's more real estate for investment than there is for owner occupied real estate out there. So you're talking about $150 trillion just of monetary premium on real estate right now. Bitcoin is 1% of that, that's 1.5 trillion. So if it captures 10% of that market, right, and it's only that market, I'm only talking about real estate. We talked about the S&P. Bonds is another massive market that has been monetized because, again, people don't want to leave their capital in a checking account, which is that's financial suicide. So they put it into other things, they put it in bonds. So bonds have been monetized as well. So when you have part of those assets moving into Bitcoin, you can see some massive upside potential.
Welcome to the Rose Show podcast. Welcome to the Rose Show. Today I'm here with Rapha Zagury. He is Swan Bitcoin's amazing CIO. And this is our second time meeting. We have a lot to talk about since we last met. How you doing over there in Brazil, Rapha?
Very good, very good. Great to be back here. It's our second time recording, our third time meeting, right? Because we met in person
exactly. We
about a
met in
year
person.
ago. Yeah, so very excited to be back here. A lot has happened since the last time, and very happy to share, you know, the latest on everything that's happening in Bitcoin at Swan and everything else. So.
Love it. Well, you are the source. I love your Nakamoto portfolio. You have done the research, Rapha. You are the real deal. And I tell this to my audience, anyone who has questions about investing in Bitcoin or anything about Bitcoin, you are the one because you've done the work. You're not just talking about it, but you've done it. So I'm so excited to get started talking about Bitcoin. And I think we just open up with what is the state of Bitcoin right now? We hit all-time highs recently. We hit 71, I think 73 in the low low 70s. And Bitcoin, it's exciting times. It's a bull market where, you know, everyone's adoption's going on. What are you seeing from where you're at in Bitcoin universe?
Yeah, it's super exciting, right? There's so many things happening. Since you mentioned price, I'll just mention one thing, because that's a conversation I actually had this morning with a former client of mine when I worked at Goldman. And, you know, he invested in Bitcoin. He's nervous, like, yeah, price went all the way to 73,000 and went below 60,000. Should I sell? You know, what should I do? And I told him two things. The first thing I told him is like, listen, Bitcoin is volatile. Forget about the short-term noise. You are going to see wild moves, right? And if you are starting to get anxious, it probably means that the size that you allocate to Bitcoin may be too big. But if not, you know, if you can live with the volatility, you should just forget about the short-term price, because Bitcoin, most of the times, it's sideways, moving sideways or down, right? And then it moves in very explosive short bursts, and that's where most of the returns are actually accumulated. So if you get out and you try to time it, you're gonna end up losing some of your Bitcoin. And the second thing I told him is that even in bull markets, because Bitcoin is a volatile asset, still an asset that initial discovery in terms of adoption, you are going to have volatility. And in the previous bull markets, even on massive bull markets that we've had when Bitcoin 10x, we would have several 20%, 25% drops, right? So along the bull market. So they are here to test your conviction. It's a part of it. And anybody allocating to Bitcoin should have a minimum of 4 to 5 year time horizon. Everything that happens in between is just noise, right? And that's how you should think about it. Now, to the broader question around what's happening in the Bitcoin world, there's a lot happening. So I'll probably break it down in two big buckets. The first one is, I would say, institutional adoption and what we're seeing institutional adoption. And the second one, we can talk about what's happening in mining, because I think it's also super exciting given everything after the halving and what's happening throughout this year. And I'll be very brief on both, and then we can get into more details in each of them. But on institutional adoption, I think it's more of the same. The ETF really brought up and widened up the top of the funnel through people coming into Bitcoin, right? And we've seen that. I can tell you the conversations I've been having are getting more sophisticated with bigger players, with players that have been in the market doing several things. Some of the big names out there. As you know, as a financial advisor, I think it's starting to trickle down to financial advisors. I worked at Merrill for almost 7 years, and I have some of my former colleagues from Merrill finally coming to me and asking, "Oh, can you tell me more about Bitcoin?" And these are, guys that have been in the business for decades and decades, so, and they are getting interested. They're starting to think about it. A lot of them tell me the same thing, that they can't buy the ETFs yet on the platform. At least they can't offer to the clients. Some of the clients can buy if they ask for, but they can't offer to the clients. But they think that's going to change very soon, and I think they're just getting ready for that. The other thing that I see, it's very common with financial advisors, which is something I've been telling them for a while, is that their current clients may look at Bitcoin as a small asset, something in the periphery that they don't get a lot of exposure to. But their kids, the next generation, is asking more and more about it. Like, was having a conversation with a financial advisor at Merrill that was like, "Yeah, I lost a big client because his son came in. His son is taking care of the assets now, and he asked me about digital assets and Bitcoin, and I didn't even know where to start." And the kid said, "Well, if you are a financial advisor and you don't know about this, I'm just going to put my assets somewhere else because I think this is where the future is." And he lost a whole account for that. So I think it's getting to the point that it's important to think about that for the next generation. As we get more and more, I think, adoption in terms of the banks out there giving access to financial advisors, I mean, this is definitely going to give some support to Bitcoin through this year. And more important, like the level of conversations. I heard many people say, "Yeah, this is an asset that can't be ignored anymore." When I look at the returns, when I look at just looking at Nakamoto Portfolio, right, and look at the risk-adjusted returns in the past, and you put it in the portfolio, which are the same tools that they use for everything else, right, for hedge fund, for everything that they do, it makes a lot of sense to have Bitcoin in a portfolio. And I think slowly and gradually we're seeing more adoption there. On the mining side, I joke that the mining industry is the only industry that we get our revenues cut in half, and everybody celebrates at that time. So we just had the halving on Friday night. Swan, of course, have moved into mining. We started mining around June of last year, July of last year, and we grew to be one of the largest miners out there now. We're at a little bit over 7 exahashes in total, which is a little bit more, well, if difficulty keeps going up, it's going to be hard for us to keep where we are, but we are at 1% of the network right now, roughly, with plans of expanding. And it's been very good, I think, to see what's happening in the mining industry. It's still a super profitable business, of course. Even after the halving, if you're hashing the right places with the right cost structure, with the right machines, it's super profitable. It's still a very, very good industry to be. But it has its risk, right? I mean, one of our production is based on an asset with extreme volatility, and we need to prepare accordingly. But I'll stop here. This was just supposed to be like broad strokes around what's happening and what I'm seeing, what's top of my mind. But I'm happy to dig deeper into any specific topic.
Great overview. Thank you so much for that. We divided up into two different umbrellas there. We have the mining with the halving, and I want to talk about the meaning of the halving. And we know it got cut, the block reward is halved now from 6.25 to 3.125. And we're going to get into that. You're the, big part of Swan Bitcoin, amazing mining operation that you guys have created over there. So definitely want to get into that. And then you mentioned the institutions now, the discussions that you see going on, and that's important. I'm noticing the same. There's been a huge increase in people opening their eyes to Bitcoin as an investment, and it's gone more mainstream. And I want to get into these risk-adjusted returns, the dollar cost average versus lump sum, and the spot Bitcoin ETF definitely was a big catalyst in that field, and the market cap of Bitcoin compared to the other asset classes, especially gold. So let's start with the mining, okay? Because I'm really excited. This is something new that you've done since we last met. So let's talk about Swan Mining, what you guys are doing over there. And most importantly, please tell our audience the true meaning of the halving and how it impacts
Yep.
Bitcoin and everyone involved with Bitcoin.
Perfect. Yeah. I'll start with mining, then I'll go into the halving, because I think talking about the halving is a good segue to talk about DCA, risk-adjusted returns,
Yes.
and everything else, right? Because I think it's in the core of the fundamentals of why we Bitcoin at the end of the day. So Swan mining, I keep telling Corey this, and what I see today at Swan and in Bitcoin in general, it reminds me a lot of what we've seen, I think, like in the late 90s in banking, where you had a lot of talent coming in. There were a lot of opportunities. There are a lot of new industries coming, technology was starting to explode. The internet was starting to explode. There were a lot of opportunities, a lot of capital coming into that sector, and a lot of talent, a lot of good people coming into that sector. I can tell you, like, the amount of people with amazing resumes. It's, just send us a message, and like many will hit me on Twitter and say, "Oh, I really want to do something in Bitcoin. I want to work in Bitcoin. I want to do something to really help the ecosystem. And I've seen what Swan is doing. How can I help? What can I do?" Right? And this is at the end of the day, we're all shareholders of the same company, right? Which is Bitcoin. So we all have equity in the same company. And I think this is super unique. And I think different than what we saw in the 90s, here we're seeing a flow of talent from the whole world, right? I have people coming in from anywhere, many different places, from Australia all the way to Hawaii, right? Everywhere in between, that reach out and are looking to do something that it's Bitcoin related, which again, it's great to see. And then in terms of the flow, right, there are a lot of flow of ideas. I think a lot of new companies coming in, looking to raise capital, looking to optimize their balance sheet. And we also have investors that are coming in and looking to invest in the Bitcoin ecosystem. So telling you all of this because mining was born exactly because of that, right? I think when we put that together with the brand that Swan has, we're out there every day on Twitter, YouTube, right? So a lot of people coming to us, and there was a mining opportunity that came to us around June of last year, as a pure investment in a mining company. We looked at it, we thought it was appealing, we really like it as an investment. But through the process of doing due diligence in the company, understanding the sector, understanding where mining was, remember, this is when Bitcoin was around $30,000. Difficulty was lower than it is right now. Prices of ASICs were, on the floor of a cycle. So we looked at all of that. We said, well, maybe it makes sense not only to invest in the company, but we should think about mining ourselves, right? And that's how Swan Mining was born. We went out, we raised capital to start a smaller deployment. We deployed in one site, thought it made sense. We saw a lot of hosting opportunities as well, because back of middle of last year, you had companies like Celsius and others that went bankrupt. So there was a lot of availability to place the machines, right? So it was, I think, was a perfect storm in a positive way for us, where we got good hosting capacity and ample availability, very low prices of machines, and access to capital for us at the same time. But well, if we're going to deploy capital anywhere in the Bitcoin ecosystem, and something that helps the Bitcoin ecosystem, right? Because we are diversifying hash rate. It's already a huge hash rate concentrations. We're trying to diversify. So again, made a lot of sense for us for several reasons. We started slowly, and one thing led to the other. We raised a little bit more capital, and as I said in the beginning, now Swan Mining is a significant player out there in the mining space, right? We're a little bit over 7 exahashes in total, as I said, around 1% of the network, and growing. Like, we have a good plan for growing throughout this year. We already acquired more machines, so super exciting. I've been in Bitcoin for a while, but I mined in the past, but very small scale, just to see how it works, just as a tech enthusiast, right? Plugged in a miner to see how it was, but nothing at scale. It's amazing to see the things that are being developed, the different technologies in terms of all the way from the ASICs to the immersion technologies that are out there, analytics, and there's a lot happening in the mining world, and it's an industry that you think Bitcoin is early, Bitcoin mining, I think is super early, which again creates there are challenges to that, but there are also, I think, opportunities with that. So that's it on Swan Mining. I mean, it's as I said, it's a very exciting project. It's part of Swan Institutional. So in Swan Institutional, we do different things, right? We have asset-backed lending, we have asset management, we have a financial advisor business, right? And we have Swan Mining as part of the of Swan Institutional as well. But let me go back, I think, to a question that you asked. That I think it's probably I can talk about that for a full show, but I think it's probably the most important point to talk about next, which is the meaning of the halving, right? And when I say that miners celebrate that that their revenues are being cut in half, right? We celebrate because of what the halving represents. The halving represents that Bitcoin's monetary policy cannot be changed, right? When we look at other coins, other assets, in the fiat world and on the digital world, a lot of them got manipulated, got changed. Their monetary policies changed significantly. Bitcoin's monetary policy has been the same since 2009. It's written in code. You can look it up on the C amount variable on the code, and it's there. It's not going to. I can guarantee that many things may change, or some things may change. That is never going to change, right? Because if it changes, that fork, the other forks are going to be the weaker forks, as has happened in the past, and Bitcoin is going to continue just hitting a block every 10 minutes on average and building upon it and continue to be super strong. And most of the hash rate is going to continue to be directed to the chain that doesn't change the monetary policy, right? Why is that important? Because for the first time, I think I would say since fiat was invented, we have probably in a digital way what can be considered the best monetary fuel cell that the world has ever seen, right? Bitcoin can, when we work, right, we deliver our proof of work, we put our proof of work out there, and we receive something for that. We want to be able to store it in some way. The ways that we've done in the past is by investing in different things, right? And I think that when you see what has happened in some of the assets in the last 2-3 decades, a lot of the monetization of these assets happened because people needed a place to put their capital, right? You look at the S&P, for example. The S&P became a huge savings technology when, in fact, most of the times, that's probably what it shouldn't be, right? It should just be a vehicle for companies to raise capital, and it got massively monetized. And there's evidence of that. If you just compare the S&P to other stock indices in the world, you see that the S&P trades at the premium most of the times, and the performance is much higher most of the times because it became a much better savings technology for globally for anybody. Like I tell Brazilians buy the S&P in their accounts as an investment, right? And they probably more than they would buy the Bovespa, which is the local index, right? The Bovespa, because they know that long term the S&P has continued to go up. And you look at the Bovespa for the and the Euro stock is the same thing. You look for the last 10 years, and it pretty much hasn't gone anywhere, and the S&P keeps going up. So you should ask, why that happens. Why, are companies in the U.S. consistently much better than in the rest of the world? There's an element of that for sure. The U.S. companies tend to be better than, I would tell, definitely than companies in Brazil. But if you compare to the premium that you're paying for that, right, part of the premium is not because of that. It's because assets keep flowing into the S&P. And what drives valuations at the end of the day, mostly, are flows. If you have flows coming into an asset consistently, you're going to continue to see higher and higher valuations. The second big example on that is real estate. I think people have monetized real estate. Real estate became this Frankenstein of an asset, right? Because people have monetized it as a savings technology when it shouldn't be a savings technology. The unintended consequence of that is that you have a whole generation coming in that is hitting the labor market right now, and they look find for a house, and they can't afford anything. They can't rent anything. They can't buy anything. And the reason for that is not that the quality of the homes became significantly better than in the past. I would argue that it actually got worse. It's because there's more demand, there's more flow into this asset, there are more people buying it because they need to put their capital somewhere else, right? And the whole fundamental reason for that at the end of the day is because money is worthless, and we continue to see huge monetary expansion. Capital is still flowing in, and that capital has to go somewhere, right? When we talk about inflation, the first thing that comes to people's mind is like, oh, it's groceries. I go out and buy my groceries, it's inflation, which it is happening. It's ridiculous how prices are rising. But the real inflation is in the assets that are closer to the money printing, right? So you see the cantillon effect also happening to assets. So the S&P is an asset that it's pretty much at the side of the money printer, right?
Mhm.
In some cases, very too close to comfort with senators, but in most of the cases, it's sitting in the retirement account of many people that just DCA into the S&P every month, not because they really know the fundamentals, but just because it's sitting there in their Fidelity account that will allocate more and more capital to the S&P. So the S&P, it's the first beneficiary of money printing. Real estate is the same thing because real estate, it's still a lot of leverage now, a little bit less because, of course, mortgage rates are higher, but still prices are significantly high because capital has to go somewhere, and it has gone to real estate for me. And by the way, side note, real estate is a terrible store of value, right? If you look long term, people don't run the numbers, because if you run the numbers and include the maintenance that you pay, the taxes that you pay, everything and you compare that to inflation, on average, most real estate, even in places like Florida, right? And if you go to Nakamoto Portfolio, I actually did this analysis there. Even in places like, Florida, where everybody says, oh, the price in the last 5 years have skyrocketed, you're not beating inflation if you account for everything at the end of the day. One thing with real estate that makes it a very unique asset, just to tie back to something I said in the beginning, is different than Bitcoin, is the complete opposite of Bitcoin, in the sense that Bitcoin, you have a real-time market every second, every day, including weekends, right? It's a market that never stops. You can see exactly what's happening in price. On a Sunday at 3 p.m. in the afternoon, you're going to have a price for Bitcoin. You're going to have an active market for Bitcoin. Real estate, you get the illusion of low volatility because you're only mark to market your real estate once in a while, and it's usually once every few years. It's when you sell your house, it's when your neighbor sells a house, right? That's when you mark to market your valuation. Even then, there's no there's no standard. So your house may be a little bit different than your neighbor house. But I can tell you, like if you had a ticker, just like Bitcoin on your in your front porch, right? That when you walk in, you could see the real-time live price of your real estate. People would not be as excited at real estate as they currently are, right? And when you look at the price going, it's the same thing with Bitcoin. Think about it. Let's do the thought experiment. Let's say, I create a fund, a hedge fund, where I'm going to give you liquidity every 4 years, right? So every 4 years, I'm going to mark the hedge fund, and you're going to see exactly the price of that hedge fund. And you're going to mark to market it. In the meantime, between points, you have no visibility of what I'm doing. I don't tell you, but I'm going to buy 100% on Bitcoin in this hedge fund, right? So, and imagine I've done this 10 years ago. I would probably have the best asset, the best hedge fund in the world right now, because as you mark, there's no volatility, right? Every 4 years, if you look at price of Bitcoin, in any top 4 year period, the price of Bitcoin never dropped, right? So you look back and you're going to have a fund that it's always going up, very low volatility. So you have this illusion of lack of volatility in some assets just because you're not looking at the daily price, right? While Bitcoin, you see price every day, and we should embrace volatility because it's a good thing. It's a reflection of the dynamics of the market. It's a reflection of transparency, and that's how markets are supposed to be, for good or for bad, right? So when I told you all of that, because I want to go back to the first point, which is, if we look at the last few decades, a lot of these assets have been monetized, right? Same thing with gold. Gold is another asset that, has been monetized, not only in the few decades, but, has been monetized from its whole history, right? And the whole reason why we ended up with a fiat standard is exactly because gold is very good maybe in storing value a long time, but very bad in storing value across space, right? Try to get out pretty much any country with a bar of gold and see what's going to happen. I guarantee that 9 out of 10 countries are not going to be able to leave with that bar of gold out of that country, even though it's your gold, you bought it with your labor, right? Completely legally, you won't be able to leave with with that bar of gold. I tell you, in Brazil, try to walk out with anything of valuable, you're not going to be able to. Bitcoin, you memorize 12 words, 24 words, and you can take it anywhere that you want in the world, right? So just by that feature of Bitcoin should have, I think, a lot higher market cap than it has right now. It is finally an asset that can store very well value across time and space at the same time. You can argue that time, it doesn't have as much history of gold, which is fair. It doesn't. But everything that we've seen so far, it's not also a new asset, right? It's been around for a while. Was having a conversation with a friend of mine who invests a lot in hedge funds, and he's looking at Bitcoin as well. He's a Bitcoin investor now, but we ended up talking about the lack of track record. And I asked him, like, how many managers do you invest? What's the minimum track record that you need in a manager to invest? And he said, well, at least 2 years. I said, well, Bitcoin, you have 6 times more than that. So you should be very happy. And it's like, yeah, I never thought about it that way. And you're right. Like, we have a much longer track record. You can argue that, and he argues like, yeah, but market dynamics are changing. And but I've been here, I told him, I've been listening to stories like this for at least the last 9, 10 years, where people say, yeah, no, but the past has been like this. The future is not going to be like that. And the future continues to be very similar to how the past was, right? At least in Bitcoin. But anyway, so I think for the first time, why the halving is super important is because for the first time, again, we have an asset that it's proving that it has the best monetary and super transparent monetary policy. And it's going to become, I think, the best fuel cell that we ever had, again, to store the fruit of our labor, our own proof of work, right, in the best way possible that we can think about. And I think Bitcoin is going to be around not for 10, 20 years, for hundreds of years. You don't need even in a very catastrophic event, you need just a few computers to continue to disseminate the blockchain, right? Even if the internet is out, the blockchain is still going to be stored in some place, and as soon as it comes back in, you're going to start being so. Even in very extreme scenarios, I don't see a scenario where Bitcoin is going to go away. And I'll stop here because I already went on a very long streak, but I can talk about, how I'm thinking about this change, this transition of monetary value from traditional assets into Bitcoin.
I love that. You're a wealth of knowledge and you have so much experience. You're at the intersection with Bitcoin. You're at the intersection of the mining, the economics, the computer programming, and you experience hyperinflation in Brazil. So you're at the intersection of all those elements with Bitcoin right at the center. So I mean, I'm sure we could just learn so much from you, Rapha. You mentioned the Cantillon effect. It's so important people understand that. It's the ones closest to the money printer, the money creation source that benefit the most. And you mentioned the S&P, excellent examples with that. Real estate, we don't realize how volatile it actually is because it's such an illiquid asset. And it's very slow moving. By the time you have the market analysis in your neighborhood, it's time already goes by, but we don't know how it ticks on the minute, like Bitcoin. Bitcoin seems so volatile because it's live, it's liquid, it's always going on. Excellent examples there. And that's the point of the show, is to let people see different perspectives. And I got to be honest with you, I never thought of it that way. And that's such a great example because people are conditioned to think that real estate is the greatest inflation hedge. And I think we've just been conditioned this way. And I know your Nakamoto portfolio shows research that it actually isn't. And I want to get into that as well. But before that, I want to finish up with this halving. It's the inflation rate, and that's an important concept. Bitcoin actually gets stronger as it goes on, while other asset classes, and I know you meant we talk about gold, besides the physical nature of it, you can't transport it, and Bitcoin's more of a digital gold. Now Bitcoin is the strongest money ever. Could you tell us about that?
Yep. And I would say that even before this halving, it was already the strongest money that we've seen. And I'll tell you why. Bitcoin is the only asset that we have perfect visibility, not only on the current monetary policy, but also on the future monetary policy, right? And as you mentioned, living in Brazil for hyperinflation, what really crushed a lot of business in hyperinflation was not the high level of inflation by itself. Because if I know exactly that, okay, every month, all the prices are going to be going up by 20%, right? It's bad, but that's not a huge problem because then I know, okay, it's always going to be 20%. I'm going to raise my prices by 20%. Everybody else is going to raise their prices by 20%, right? And the margins are not compressed. The margins are going to stay the same for most of the business. What really crushes business in hyperinflation is that prices go up exponentially and not at the same time. So you would have things like salaries, which take time to adjust to inflation. So if your income is going to be the last one to go up, while other prices that can be adjusted very quickly are going to go up very quickly, and you get killed with that. Like I remember seeing, our quality of life going down every month because, until the point that, my father was able to adjust the rates of his doctor, adjust the rates that he charged to patients, right? And then we go back and okay, now we reset where we were, but that would last maybe 1 month, 2 months, and they're like, okay, now this month we can't close the bills anymore, you can't pay all the bills, right? And that's what kills it. And Milton Friedman said that he's like, at the end of the day, what economic participants need to be worried about is not inflation by itself, it's unexpected inflation. Expected inflation, again, it's
Yes.
bad, but unexpected inflation, it's what's even worse, right? And that's really what will put a lot of pressure on there. And this comes as a cost, right? It's a hidden cost. Most people don't feel it, but it's a cost for economic activity across the board. And Bitcoin, by the way, side note, same, a little bit less than, of course, fiat money, but gold has the same problem because gold prices start to go up. That's another incentive for people to mine more gold. Miners deploy more capacity, they deploy more gold into the system. And what that does is that you have more the inflation of gold, right? The flow of gold goes up and prices go down. And usually these cycles are not smooth. You have a huge overproduction. It's the same with oil, right? That's why you have oil cartels out there where you're going to have a huge inflow of these assets, and then that's going to drive price down, and then you're going to have another collapse, and you have a lot of miners coming down, and then, of course, prices are going to go down, and then they go beyond what the fair value would be, and that adds people complain about volatility. This is added volatility that you don't need, and Bitcoin doesn't have, because you have more, I can turn all my ASICs on and off at Swan, and we won't make any difference in the market. First of all, because we're small, but even if we were very, very large, it didn't matter, because what would happen is that Bitcoin blocks would start. Let's say, for example, I multiply by 10 the capacity I have. For some reason, I found 10x more machines that I have. We start mining. What's going to happen is that we're going to start finding Bitcoin blocks very quickly, right? So instead of the blocks coming in every 10 minutes, which is what they're supposed to be coming in, blocks are going to be coming in, let's say, every 9 minutes. Well, the genius of Satoshi Nakamoto, he wrote something that's called the difficulty adjustment. With every 2 weeks, if blocks are coming in too fast, it becomes harder to mine Bitcoin in order to adjust so that time goes back to approximately 10 minutes between blocks, right? So in 2 weeks, when another difficulty adjustment comes in, all that hash rate that I deploy gets diluted, because it's going to get harder to mine Bitcoin. The blocks are going to come down to an average of around 10 minutes between each block. And the opposite is true. When we saw what happened in 2021, when China banned Bitcoin mining, a lot of the miners just turned off. And you can see the difficulty chart. You see that the difficulty collapsed, became easier for other miners to find Bitcoin blocks. And blocks, because blocks were coming in longer than 10 minutes, right? They adjusted to come back to 10 minutes. And you continue to see the same supply of Bitcoin. And by the way, in every block, you know exactly that, in the last epoch, it was 6.25 Bitcoins. And after the halving, you know that's 308 Bitcoin is going to be coming in every block for the base reward. And that doesn't change. Transaction fees change, and that's a complete different conversation we can have around transaction fees, which being super interesting post halving to see what's happening. But the base reward, which is the base reward, is really what matters for inflation, right? Because those are new Bitcoins hitting the market, while transaction fees is a transfer of Bitcoins from one person to another, right? So if you need to write a transaction in the blockchain, you're going to pay a fee, and that fee goes from you that is sending the transaction to the miner that is mining that transaction and putting in a block. But there's no creation of new Bitcoin there. It's just a transfer of Bitcoin from whoever is looking to transact to the miners that write in the blockchain. So I get, just to wrap up, I think for the first time, as I said, we have an asset where you have full predictability, full visibility, 100% transparency. It's open source. Anybody can verify the code, and you see exactly what's happened. Quick story here. Like when I started, I don't know if I told you this in the last time. I don't think I did. But when I started into my Bitcoin journey in the beginning, for some reason I thought, I had it on my mind. I had the typical questions around, oh, governments are going to ban this, it's never going to work out. But for some reason, I thought there was a backdoor in Bitcoin. I'm like, no, there's got to be a backdoor here that somebody somewhere can change the protocol. So I went through this like deep rabbit hole of trying to understand not only the code, right, that revealed the code, but also the process for changing the code, historically, how the code was changed, right? Can a developer come in and just arbitrarily change something in the code and deploy it, right? And then you start to know that the code is diversified, it's deployed in different places. People have different versions. And as I said, that's a whole rabbit hole by itself, but it just shows, I think, the strength of the network and the monetary asset that we have right now.
Truly a dynamic asset class. I always say Bitcoin is its own asset class. The way it moves, the way it functions, performs, it's amazing. And global reserve asset and it cannot be manipulated. And that's so important. Like we mentioned with the Cantillon effect, the money printers and those closest benefit the most. Well, with Bitcoin, you don't have that because it cannot be created. You have 21 million and that's it. It's a finite supply. And that's the beauty of that is decentralization, and it's incorruptible. And you've touched upon all those. I want to talk about the market cap, and that's important for people to understand about, it's hard to predict price. And I know
Yep.
part of the principles of the Nakamoto portfolio is not to predict price. There's a lot of volatility, there's a lot of uncertainty. We can't pinpoint that. And that's not the purpose of this. We want to know where it's going in the trajectory. And like you said, Bitcoin is here to stay, and it's only going to keep growing in its market cap. And
Yep.
right now, if you could tell us about how small it is compared to the other asset classes, such as gold, and where you foresee that headed to, and how much growth there is ahead.
Yeah, this is an inevitable conversation with people coming into Bitcoin. The new ones, all the way from institutions, love to have this conversation. I'll tell you how it usually happens.
Mm-hmm.
So a lot of the work that I've done at Nakamoto Portfolio is to put Bitcoin in a language that traditional finance players can understand it in a portfolio, right? So you go there and you can literally model your portfolio. Say, I have a portfolio that is, I don't know, 10% S&P, 20% bonds, commodities. You build it up, and then you can simulate a Bitcoin allocation. So I usually start there, say, what's your current asset allocation? What do you have? Then I back test. So if you've done this in the past, this is how much of 1, a 5, a 10% Bitcoin allocation would have increased your risk-adjusted returns. And by the way, here's what the optimal risk allocation is. We do all of that. You come to the end, the results, of course, are, and then through this conversation, there's usually a question around, yeah, but you're looking through the last, let's say, 10 years. Price, it's not going always in the same acceleration path. Let's look at the last 2 years, last 3 years, and you do that. And even after all of that, they still see that Bitcoin is, as you said, uncorrelated to other asset classes. It adds benefit to their portfolio. And the natural next question is, okay, I got all of this, but still, this is all back tested returns. I don't know how to value Bitcoin. How should I be valuing this asset? Is there a valuation methodology? How do I know that the $60,000 that I'm buying, $64,000 that I'm buying today, it's a fair price and it's a price where I should be getting? And I answered that question with what you said, which is, listen, at the end of the day, it's an extremely volatile asset. Making price predictions, it's extremely hard. If I told you or anybody else tells you that Bitcoin is going to be at price X by date Y, I can guarantee you they're wrong because it's impossible to predict the price, right? What I can tell you, and this is where I go for the conversation next, which is what you alluded to, which is, let's take a look at the total addressable market for Bitcoin, right? So if we think Bitcoin is really in the arena to compete with other assets that have been monetized, that have been used as a store of value for many, many years, where can it go? And to answer that question, let's start with the first point which you mentioned, which is market cap, right? And let's just look at some of the large assets out there in their market cap. So look at stocks, and these are all approximate numbers, but stocks around $100 trillion in market cap, bonds 130 trillion, gold a little bit more than 10 trillion, right? Real estate, the big one, the elephant, it's 300, anywhere between 300 and 350 trillion. You have other markets that have been monetized, like fine arts, for example, that's another almost $2 trillion. So if you add all of these up and you compare to Bitcoin, Bitcoin is roughly $1.5 trillion in market cap, right? So there's massive amount of room to expand the total addressable market. It's still orders of magnitude of where we are right here. And to show, I think, the potential of price appreciation of Bitcoin compared to the other assets, I actually wrote a model which is also available at Nakamoto Portfolio, which is called the Schrodinger model. And it's Schrodinger, side note here, side story. The reason why I called it the Schrodinger model is there's this thought experiment in quantum physics. It makes people understand, I think, quantum physics a little bit better. It's called the Schrodinger cat. So the Schrodinger cat experiment is an experiment that, you have a cat that it's inside of a box, right? The box is completely sealed. You can see it inside, but there's a vial of poison inside of the box that 50% of the times it leaks and the cat dies. 50% of the times it doesn't leak and the cat is alive. The box is closed. And the question is, using quantum mechanics and the calculation behind quantum mechanics, is the cat dead or alive? And the answer is the cat is dead and alive at the same time. And by the way, when you observe the cat, your observation actually influences the outcome, which again, that's a complete side. We can talk about that for a long time. But when I thought about that, I thought that brought a lot of parallels to Bitcoin. Like Bitcoin is dead and alive at the same time, right? You go into Twitter right now and you look at comments about Bitcoin, you're going to have some of these are dying along with time, but there's still a lot of people that say that Bitcoin is dead, that Bitcoin is going to zero, that Bitcoin is worthless, right? And you have people on the other side saying, no, Bitcoin should be worth, hundreds of millions of dollars. And the question is, where is Bitcoin right now? And so the Schrodinger model is something. It's my trying to get to an understanding of where price should be. So I get all of these assets, and what I do, very simple math here. There's nothing complicated. I just say, okay, let's use the case of real estate, $320 trillion, right? So let's call it 300 trillion to make it a round number. So let's assume, for example, and people can change the assumptions of the model. Let's assume that half of that is due to monetary premium. So half of the value that went into real estate, it's not because people wanted to buy real estate to live, because they thought it was very good real estate that they were buying, but because they needed to park the capital somewhere. And I don't think that's a bad approximation if you think about the number of assets in terms of real estate that are out there that people really live on there, and compared to investment, there's more real estate for investment than there is for owner occupied real estate out there. So you're talking about $150 trillion just of monetary premium on real estate right now. Bitcoin is 1% of that. That's 1.5 trillion. So if it captures 10% of that market, right, and it's only that market. I'm only talking about real estate. We talked about the S&P. Bonds is another massive market that has been monetized because, again, people don't want to leave their capital in a checking account, which is that's financial suicide. So they put it into other things. They put it in bonds. So bonds have been monetized as well. So when you have part of those assets moving into Bitcoin, you can see some massive upside potential. By the way, I also think this is an important point on why Bitcoin is so volatile. Because it's so early, small changes in the percentage that we perceive in our, because we're doing like maybe we don't do it rationally, but as players in this market, that every time we're thinking about what is the probability that Bitcoin actually succeeds, right? So indirectly, when that probability goes up, the value of Bitcoin will go up significantly. So just in the case of real estate, right? If that probability goes from 1% to 2%, Bitcoin just doubled in price just because of that. Because in your mind, you thought that instead of having a 1% probability of capturing that, now it's a 2% probability, and which is small. It's a 1% change, right, in the value of real estate, but it reflects 100% change in the Bitcoin price because it's still, again, very, very small. I'm not even taking into account something that could make this even faster, which is if everybody wants to move from one asset to the other very quickly, prices are not going to go up by 100%. They're going to go up even more because at some point you're going to hit all the sellers. Selling is going to dry up, right? And then prices are going to go significantly higher from where we are. But put all of that aside and just think about, in terms of probabilities, and the probability that it's priced right now for Bitcoin for succeeding, it's very, very low. So I keep telling people, I think we're super, super early. And one of the things that I do, I started telling you how I got here, how I do this with investors. I usually do something that it's a little tricky. I ask them before I go into the Schrodinger model. I tell them the circuit. So all these assets have been monetized. What do you think it's the probability that Bitcoin, demonetizes part of real estate? And I can say, oh, we think it's, I don't know, 5% probability. And what do you think is the probability that it will demonetize bonds? Oh, I think it's 10% probability. And then I put all of this, and I get to the end, I put their numbers and say, given your numbers, not my numbers, right? Bitcoin should already be 5x. And by the way, most of these people are more bullish than I am when they give me their numbers. And you show them, and their first reaction, oh, the math is wrong. And then you look at the math, like, oh no, it's actually simple math. And and they realize that it is still super, super, super early on this asset class, right?
Well said. Thank you so much for that. I think we are very early, and just that number right there, how it's only like 1% of all the assets. I mean, this is just amazing. The market cap is so small in comparison. And that's how I like to look at it as an investment advisor, and just my focus in investment and asset allocation, just like you. And I always look at portfolios, and we look at all that. And it's important to look at not the price per se, because the price changes by the second, and it's not to predict price. And we're not here to make predictions, but we're here to look at the market cap. And in comparison to other asset classes, wow, I have to say the growth this is just the very beginning, and there's massive growth ahead. And I just love looking at that opportunity that we have. And a lot of my people say to me, am I too late? Did I miss that? I mean, it's 70 now or 60 something. And I'm like, no, you got to look at the bigger picture.
Yep.
And there's just so much more there.
You
I
just
want,
reminded me of
yes.
something. So we did an event here in Brazil, a Swan Salon event, which we invited a lot of people to. Complete side note, but we brought in a basketball player that actually played for the Cleveland Cavs,
Mm,
Anderson Varejão, who lives in Brazil. He's Brazilian, right? Actually, he still lives in Cleveland, but he was in Brazil. We brought him in to talk about finances and how players and sport people, how they look at their finances. And of course, I talked a little bit about Bitcoin. But anyway, through that event, there was a very large family office that came to that event, and we had a conversation. And at the end of the event, after we talked, they came to me and said, oh, we are going to be allocating Bitcoin. There are two things that you said that convinced me. One of them, which is something you just mentioned, is like zero is never the right answer. And they have no Bitcoin allocation to their clients, right? Like, and I said that, like, you're absolutely right. We should, maybe the answer is not to have 10%, but the answer is definitely not to have 0%. So we need to be comfortable about that. And the second thing I told them, which really got them to think deeply about an allocation, is I said, listen, you invest, this family office, you invest every month in venture capital funds, private equity funds, hedge funds that give you no visibility on what they're doing, no transparency, right? Most of these don't have risk adjusted returns. They're close to what Bitcoin does. Why don't you invest in Bitcoin, which it has all of these, plus it gives you the transparency and the visibility into the asset, right? And that really got them thinking. You're like, yeah, we don't ask these managers as many questions as we are asking about Bitcoin. Maybe we should just put that aside. Again, just look at the track record, the returns, invest, and with time, of course, you're going to get more comfortable. You're going to understand more. It's not an easy thing. It takes a long time to really grok Bitcoin and to understand it because it's multidisciplinary, right? You need to know a little bit of math, probability, finance, tech, computer science, right? Game
Quantum
theory.
physics. That
Yeah,
helps, right?
yeah, it helps, but you need to know a little bit of everything, and you need to spend the time really putting everything together, right? And most of these asset allocators, they don't have honestly the time because they are talking to clients, they're thinking about their lives, they're thinking about different things that they're doing, right? So unfortunately, they rely on other people to do the due diligence for them, and nobody's going to do the due diligence for them on Bitcoin. They have to put their own proof of work, just like you did, and understand the assets, right?
Well said. I love that story. It's always just about opening people's eyes, just questioning. And I always say that, just try to look at it from a different perspective. And, the multidisciplinary, interdisciplinary approach to, systems thinking approach, I like to say as well. It serves very well when you're talking about Bitcoin.
Yep.
The asset allocation is an excellent point. You and I both talk about that extensively with our people. And I think we mentioned this last time we met, all the asset classes right now are correlated to fiat. So we all seek to diversify. Diversification is most important. But then you have to ask, if they're all correlated to fiat, are we really diversified?
Yeah, we're not, right? At the end of the day, all of these asset classes are very, very correlated, particularly on the downside. If you actually
Mhm.
look at the correlation on the downside in extreme scenarios, they all correlate. Bitcoin does also a little bit, to be fair. When we have scenarios of distress, Bitcoin tends to sell out in the short term.
Short term,
Um,
yeah.
but the other thing with correlation is that you will look at correlation in different time frames. So if you look at 1 day correlation, yeah, in these periods of distress, the correlation of everything goes to one. But in longer time periods, the correlation of Bitcoin to all of the asset classes is close to zero, which is exactly on a portfolio basis. This is exactly what you want. It's an asset that has positive returns, very good Sharpe ratio, and low correlation to the overall to your overall portfolio. And people usually get shocked when we run the numbers and we show like, oh, Bitcoin's going to add a lot of volatility to my portfolio. And when you run the numbers, okay, in the past, here's your portfolio. If you added Bitcoin, yeah, your volatility went up, but most of the times it doesn't go up nearly as much as they imagine. But the second thing that I show is like, look at your Sharpe ratio now. Look at your risk-adjusted returns. Look at
Mhm.
how much more returns you got for these additional units of risk that you're taking, and those numbers explode up. If you look at the 60-40 portfolio, if you look at, in the last 9 years, see if I get these numbers right. In the last 9 years, even rebalancing, you can do rebalancing, it doesn't matter. And just a 60-40 portfolio, by adding Bitcoin to that portfolio, your Sharpe ratio goes from something like, a 60-40 portfolio already has good fair returns, around 8% for the last 9 years. By adding Bitcoin, let's say you add the 10% Bitcoin allocation, the 8 goes to something like 18%. Your volatility goes up also from around 11 to, let's say, 15% roughly, but your Sharpe ratio doubles. You go from like a 0.5, more than doubles, from like a 0.5 Sharpe ratio to more than one Sharpe ratio on your portfolio, more than doubles in total. So, and that's what you want in portfolio construction, is that, you are make sure that, because risk is inevitable. We're going to take risk in everything that we do. We're going to take risk in every asset that we purchase. What you want to make sure is that you're getting compensated to run that risk. Don't take stupid risk, right? Take good risk. And I think Bitcoin is among some of the best risk that you can take out there. And volatility is going to naturally go down with time as, we have more and more adoption. When Bitcoin approaches the market cap of real estate, I guarantee you it's not going to be as volatile as it is right now. But that's 20 years down the road. It's not happening now. And in the meantime, we are going to have volatility, and we should be thankful that we have volatility. It's a sign that we're still early on the adoption phase.
I love that perspective. We should embrace the volatility, and as it grows, it will become less volatile. Excellent points there. I think the best asymmetric risk profile is to have Bitcoin, part of your asset allocation, and it depends on, the person, what percentage they can handle or they prefer. It's, investments are very, personal and depends on their own strategies and styles. But I think having zero, like you said, zero Bitcoin is actually the worst possible scenario. And it's important to have that diversification. Well said. I
Yep.
want to go into the why, because the why is so important. Why invest in Bitcoin? And you having an economics background like I do, we talk about inflation hedges, monetary destruction seems to be inevitable. I mean, you pull up the chart from Fred on the declining purchasing power. It's like a cascade. And
Yep.
the CPI number, I think it's in how they calculate it. If you look at the shadow inflation, it's much higher. I think it's about double the current print. So we know, and then the fiscal dominance, massive public debt. They are spending to no end. Fiscal deficits are increasing.
Yep.
It just seems that the debt is insolvent. And a lot of economists have used that term. So let's touch upon that and about all the monetary destruction that we have ahead of us. I don't mean to be so dark and gloomy, but it's important to be realistic about what's really going on in the economy.
Yeah, and I don't think it's dark and gloomy. I think we need to be aware of these things as they are happening. And I see this is one of the reasons why I'm so positive about Bitcoin, because we may be wrong, but at least I know that it's a way out. So if everything goes wrong, it's a new monetary system that we can embrace, that can all go through, that we don't need anybody's approval or permission to do it. I mean, it's completely open source, open to anybody, right? So just the fact that we have that it's almost like a fire exit, right? You don't want to use it, but knowing that it's there, it's super important. Um, think about it this way, right? I was telling you in the beginning about why we need to have somewhere to put the proof of work, the proof of our labor, the store our value somewhere. And as I said, people have been doing it in different assets. So they've done it in the S&P, they've done it in real estate, all of that. But they all have one common thing. They're all denominated in dollars. And the dollar has this, and the all fiat currency has this very bad characteristic, which is for you to earn fiat capital, you actually need to spend sweat equity, work, right? And actually do something in order to get it. Central banks, on the other hand, when somebody's on the other side of this, they just print a button. So there's no work that needs to be done on their side. It's literally just pressing a button, and they issue the same capital that you had to spend your time away from your family, your own capital, take risks. They don't need to do any of that. They just push a button. There's a whole question around if they can do that, why do they need to tax you? But I'm not going to go there now. But the reality is that, again, they can dilute you at the whim of pushing a button. Very different in Bitcoin, right? Bitcoin doesn't matter. They can mine as much as they want, just like we do. They're going to have to either go out and buy Bitcoin from other Bitcoiners, or they're going to have to go out and mine Bitcoin and spend the energy to do that, just like Bitcoin miners. There's no other way for them to acquire Bitcoin other than confiscation. But even in confiscation, if that's tried to be done, I can always just memorize 12 words in my mind, right, and store Bitcoin in a very unconfiscatable way. There's always something that can happen. We can go into the extremes, but I think having an asset like this, you're much closer to self-sovereign than any other assets we ever had, right? Like my grandparents came to Brazil escaping from the war. They left everything behind. My grandfather, I think, came to Brazil with like one diamond, which was something, a small diamond, was something that he could bring, and that's how he restarted his whole life. Everything else, apartments, his factory, everything was left in Europe for governments to take over and destroy. We had Bitcoin at that time. Can tell you that it would be much harder to confiscate assets from other people because which shouldn't happen, right? The assets should never be confiscated. It's just mind-boggling that somebody could do what they did. But anyway, for the first time, again, we have an asset that has these characteristics, which is super important. When you think about, and why is that even more relevant? Now I'll go to the second part of your question. Government spending is just exploding everywhere, right? And at some point, the governments need to finance that spending. And they're going to try everything because they need to finance the spending, and they think it's their job is super important. And I'm not an anarchist. I think we should have government, but I think we should have minimal government. We definitely shouldn't have government as big as we have today. And I'm not talking about the US. I'm talking everywhere, right? Government's too big everywhere right now. what they're gonna do is they're gonna try to do everything to keep their purchasing power, right? And they either tax people more, they're gonna print more capital, right? They're gonna issue more debt. They're gonna try everything. And none of these scenarios is good for us as individuals. We're gonna get more diluted. Our capital is gonna the base. We think to our point about diversification, and I'll tell you, every investor talks about, oh, I need to diversify into equities, bonds. And then I always ask, like, oh, you're not diversifying your base currency. And people just stare at me like I'm crazy. Like, what are you talking about? Like, yeah, it's everything is denominated in dollars. What happens if the dollar goes away, right? And the answer is that's never going to happen. And I go back to probability and say, well, are you 100% sure about that? Is there a 1% probability, a 0.5% probability? And there is some probability, and they're not. And if that happens, it's a 0.5% probability scenario that wipes out all your value, right? Look at the stock market. This is another thing. If you look at the stock market in Brazil, in Venezuela, during periods of hyperinflation, right before hyperinflation, investing in equities was the best thing you could do. Equity prices were exploding up because the assets needed to go somewhere, and stocks kept their purchasing power in the beginning. But then the companies started to go under because they couldn't plan for hyperinflation, and then they started to go bankrupt, and then the stock market collapsed, right? But before that happened, you saw prices go up exponentially. Uh, and again, part of why we see stocks going up is inflation. It's asset inflation, as we talked before. It's not inflation in the groceries, but it's asset inflation. That's again the reflection of the debasement of more money printing, of more um, capital coming into the economy. This has been, I've seen this throughout my whole career. I remember, these boom and burst. We think boom and burst cycles, economists are taught that they are natural, that they need to happen. They are going to always happen, right? And maybe they are going to happen, but I can tell you that it doesn't help that governments actually think that they can adjust and make them smoother. I think they actually exaggerate the cycles, and at some point, you just can't get out of it because the cycles become too big. The volatility is increasing, every time, and at some point it just explodes up. And I don't know, it's hard to say because government spending continues to go up, and the market still doesn't see that as a immediate problem. But long term, there's no way that this is it's sustainable. It's gonna have to be corrected in some sort of way. And in that scenario, and it could be, as I said before, 20 years, 30 years, I would rather hold an asset that cannot be diluted, cannot be printed, cannot be changed, cannot be confiscated, like pretty much any other asset, right?
Thank you so much for that. Bitcoin is hope for the future. And I think that's the best way to look at it. It's, when you mentioned how much longer this can go on, and sometimes people say, oh, we're fine right now. It's been happening. We're fine. Even though it's unsustainable, it seems that we can keep going. It takes time, and that's the key. They keep kicking the can down the road, and eventually it will come to the point where it can't go on anymore. But it does go on longer than one thinks. But we should have some type of protection in place, like we said,
Yep.
about Bitcoin. And I love that point that you made about asset inflation, and that's so important because sometimes people think of it's higher prices, higher costs, but it's also the top number. It's the higher asset prices. It's like everything inflates. So you have higher asset prices as well as higher costs, higher prices overall. So you have that inflation affecting everything. It's that effect on everything. So it's the hidden tax, they call it. And we don't even realize it sometimes. But yes, like you said, the S&P, the reason why it seems to be so elevated is also inflation in that market. So well said there. But yeah,
Inflation
Bitcoin,
everywhere. Look at your
right?
healthcare costs. Look at,
Oh my
the
gosh,
cost of college for
insurance.
your kids, insurance. It's it's hyper. These are hyperinflating. It's
Yes,
very
absolutely.
expensive to have healthcare. I remember when I went to the U.S. in 2001. I don't know, we would pay something like $300 a month in healthcare for my wife, and like can't buy anything with $300 these days. It's like it's 10x that to have some kind of decent insurance at least, right? And when you have kids, it's even more for the average family. And we put college tuition costs, which is another thing that keeps going up.
Oh gosh,
So
yeah.
there's definitely inflation.
It's everywhere. And so it's important to have an uncorrelated asset such as Bitcoin that isn't manipulated and doesn't have that attachment to fiat. In the short term it does, but everything in the short term. But in over the long term, it's an uncorrelated asset. I want to talk about the Bitcoin's historical return analysis. You did a lot of research in that, and you took a deep dive into Bitcoin's price behavior, and the returns aren't normal. And this will lead us into how to invest in Bitcoin, which is, and I love your research about dollar cost average versus lump sum. And that's important because we're always thought to do dollar cost average. However, with Bitcoin, it's a little different.
Yep. So two different points here. So let me start with the distribution of returns. And yeah, I mean, that's another go to Nakamoto Portfolio. There are a couple of different things that I posted there around the Bitcoin's historical distribution of returns. And it's no surprise that, of course, they're very volatile, but it's interesting to see the distribution of returns, how fat tails they are, how outsized they are, how close to the mean they are. There's a lot of analytics there. Let people go into the details. But interesting with that, and I recently did this. I got the two things. I looked in the past and said, okay, let me try to find with different distributions out there, which are the ones that explain the Bitcoin returns, the best. And I found, a distribution that had very close to historical returns of Bitcoin. Who knows what's going to be in the future, but at least it gives me some idea to model. And then I use that curve to forecast in the future and say, okay, so given that we know that there is this curve of probability, and what it does is you have different levels of price changes, right, and different level of probabilities. So you can say, so what is the probability that the Bitcoin return in one day is going to be higher than 1%? You get that probability. What is the probability that it will be lower than the drop to more than 1%? You can do that probability. And with that, you can do simulations, right? You can just say, okay, so let's forecast Bitcoin doing simulations. Say every day I walk around a random path and I see where the price is going to be. And this is another good way to see how volatile the price can be. I'm going to pull up the results here. But I did it just as a thought experiment. I did 1 year of analysis with, I think, 1,000 simulations. And what you see is that in 1 year, if you use the historical returns of Bitcoin, you forecast to the future, in 1 year's time, the average expected price of Bitcoin is $140,000. Of course, significantly higher than where it is right now. That I don't need to say, it's explained by the historical positive returns that we had in Bitcoin. And there's nothing interesting about the average. I say the average here is the same thing as you just sticking your head in the refrigerator and put your feet in the stove and saying, oh, on average, my temperature is fine. Your head is gonna freeze, your feet's gonna burn. So and there's just nothing good about the average here. So it's the same thing, because if you actually look at 95% of the simulations, the prices fall between 30,000 and 448,000, all over the place.
Oh.
Same thing. It's impossible to forecast Bitcoin returns. They are going to be volatile. And again, embrace that, because the best simulation there, I don't know if I have this number here, but I think it's like 900 and something thousand. It's the best simulation that came out. And the worst one is like $7,000. So very asymmetric returns, very risky, but just keeps. I think the idea here is not for people to run the math and get anxious about the amount of math behind it. It's just to have an idea around the what the realm of possibilities is for Bitcoin price in 1 year's time, right? If you and a couple of things that you see with Bitcoin returns, and I mentioned one before, but just to recap, is it's very interesting in the distribution. The distribution has fat tails to the right, which means that most of the returns are kind of like close to the average, but then you have these very wild returns on the extremes. And this is almost, if you've been to Bitcoin for a while and you've been following price for a while, you know that this happens where price, and I think we are going through this period right now where you have a period of time where price doesn't go anywhere, just seems to be flat, slightly down, and, it's just dragging along. And then all of the sudden, sometimes there isn't even a catalyst. Something just happens, price starts going up, and then it moves 10, 20%, 30% in a week, right? And it's also a reflection, which is another good sign. This is a temperature that is telling you that it's still early. So it's an asset still in adoption, and probably, as I said, flows is what drives price, and you're probably just seeing a period of time where there's more adoption. There's, either a nation state that is buying or somebody that is buying a large amount. We don't know. There's no way for us to know, but something is happening that there's a lot of demand for Bitcoin out there. It's very different than traditional assets. If you look at the S&P, for example, there's this saying in Wall Street, the stock markets go up the stairs and down the elevator shaft, right? So it usually goes gradual and then collapses down. Bitcoin is, it's usually just going on a flat terrain, and all of a sudden it takes a rocket at some point, and then it gradually goes down. So maybe it's going down the steps and then up
Yeah.
with a rocket. That's
Elevator,
probably
yeah.
a better, a better analogy. So it's a very different asset in terms of how you should expect returns. This is why I tell a lot of the investors that I know that don't try to time this market. I haven't, in my whole career of meeting traders, I rarely found traders that were consistent for a very long period of time. In an asset like Bitcoin, I don't think anybody can predict the price because it's so many random variables in the middle. There's it's just impossible. You're better off just set an allocation that you can sustain, and then you hold it for the long term. Now it's a good time to talk about your second question, which is, okay, I get it, I understand, I know that I should set an allocation. I determined that I want to have a 1% allocation to my portfolio. How do I implement that? Is it better to just go out and buy the 1%? Should I dollar cost average at that 1%? What is the best strategy? So I'll answer that first with the numbers, and then I'll talk to you a little bit about the psychology also, because I think it's important. Side note, we had a conversation a couple of weeks ago. There's a show that I record with Don Bay. It's called the Nakamoto Gauntlet, where we invite portfolio managers, pension fund managers to come in and talk about their asset allocation. Sometimes we just do a show where we look at asset allocation of different pension funds out there, and we make a suggestion to Bitcoin. And last week, we invited the CIO for the Houston Firefighters Pension Fund. They were the first pension fund to allocate to Bitcoin. They put a very small percentage, 0.25% of their portfolio around a year ago. That increased to 0.5%. And he just told us last week that he's going to sell all his gold, which is a 2% allocation, and allocate to Bitcoin. And then I asked him, I'm like, okay, so when you make this decision that you're going to go from, 0.5% to 2.5%, because he already has 0.5%, he's going to allocate 2% more, how do you go into allocating it, right? And his answer was, well, I decided my allocation price doesn't matter. I should just get to the 2%, regardless of where the price is. I should just make sure that I get 2% of my allocation. And this just goes to show, I think, how a lot of the pensions endowments, foundations, they think about asset allocation. This is right. Like, they made the decision. The thought process of getting to that decision is a long thought process. But after they made the decision, they just allocate their assets. It's a very different question for the individual, right? For the individual, I would say it should be mostly the same thought process. The short answer is that you're always better, or most of the times you're better off. You decided that there's an allocation, should just do like a pension fund, just allocate it immediately, right? Why? Because, as I said, price moves very in explosive periods of time, and if you miss these times, you're going to end up buying Bitcoin more expensive. Another study I did on Nakamoto Portfolio, I actually went back for a period of time. I think I did 4 or 5 years, and I looked every single day, and I said, okay, in this day, I had two choices. I could either buy a lump sum and allocate, let's say, 1% of my portfolio in Bitcoin, or I could buy weekly for the next 4 weeks, or I could buy monthly for the next 3 months, or I did different scenarios. And on average, lump sum always beats dollar cost averaging because again, and it makes sense if you think about it. If you're lump summing, you have, let's say you're going to lump sum in 4 pieces for a month. So the first week you allocate 25%, the other 75% is sitting in cash. So Bitcoin price goes up exponentially. If you just bought the 100% Bitcoin, right, you are going to be underperforming significantly. So the math answer is very different, I think, than the psychology answer, because the reality is people get anxious if they buy. Let's say I tell them like, you're going to buy 1% of your portfolio in Bitcoin, you need to buy this amount of Bitcoin, right? Which I don't know, it's equivalent to, I'm making a number up, $10,000, right? And they buy $10,000 in Bitcoin. Their portfolio could be much bigger. Their portfolio could be hundreds of millions of dollars. For the first few weeks, they're going to keep an eye on that $10,000 like it's 100% of their portfolio. And then if it drops by 50%, they're going to get out. They're going to say, this is not for me. I should have not bought this. This is too volatile. They're going to get out. And this happens, right? We've seen this time, and we've seen this in 2007, right? We've seen this in the last bull market when we hit a peak, right? And then it drops significantly. And people just get out, and they get out at the worst time possible. So dollar cost averaging for many individuals out there gives them the peace of mind that, okay, so it's like an allocation strategy that is going to smooth out the entry point, the volatility. But it comes at a cost, and people should know that they may have the risk of just the opposite happening, price going up very quickly. I have, a friend of mine, this just happened. Like, I've been telling him like price dropped for around $30,000 last year. I told him, well, it's a good time to buy. He bought a little bit. And it's like, yeah, when price drops a little bit more, I'll buy a little bit more. Price never dropped more. So it went to 40,000. It's like, oh, now it's too expensive, and I was going to buy more. Then it went to 50,000. It's like, oh, now it's really too expensive, and I'm not going to buy more. Then it went to 60,000. Same thing. He's like, I'm not going to buy more. Then it went to 70,000. Didn't buy. Now that it corrected, I call him. I was like, listen, it's around 60 again. You should allocate. And he's still with that mindset. He got anchored to the $30,000. And I thought, like, that train has left the station. He's not going to go back there, at least not in most scenarios. It could be, but it's an extreme scenario. But just allocate. So there are the opposite challenges of dollar cost averaging as well. Bottom line, if by the way, another thing, you can go to the Nakamoto Portfolio and you can run different simulations and say, okay, if I start on this date and I did this dollar cost averaging of this lump sum, how has it performed? The flip side, the positive flip side of dollar cost averaging, I haven't run the numbers, but people can run these numbers. If you started dollar cost averaging in the peak of the last bull cycle and you bought a little bit of Bitcoin every week, every month, since the top of the last bull cycles until now, even though the price didn't go anywhere, right? We're pretty much at the same price that we were at that peak. You were up close to 100% or something like that, because you were averaging in, you bought Bitcoin at much lower prices, right? So your average was much lower. And you end up with a much better, I think, average entry price. And if you just bought Bitcoin, right? So yeah, I think people should run their numbers, should go to the Nakamoto Portfolio, take a look, and then make a decision around that. One thing I should have mentioned at the beginning, which is, I think, just a description, which is a lot of people, when they think about dollar cost averaging compared to lump sum, think about an example. If you have a paycheck that you receive every 2 weeks and you determine that, okay, whenever I receive my paycheck, I'm going to allocate $100 to Bitcoin every 2 weeks, right? In my mind, I don't define that as dollar cost averaging. For me, that's a series of lump sum because the decision was the capital became available and I immediately deployed into Bitcoin. Is different than the pension fund that comes in. Is like, I have a portfolio ready. I'm going to sell out of something and then I'm going to allocate into Bitcoin. So you actually need to make the capital available and deploy the capital. In this case, in the individual that it's buying every week, buying every month, they're just averaging, a series of lump sums. They're not really dollar cost averaging, and people should do that. I mean, you end up, I think the best way to build a Bitcoin stack is to do it slowly, gradually, so that it gives you time to weather the volatility. And more important, I think, to learn Bitcoin. You're not gonna. I started a Bitcoin journey like that. I saw Bitcoin price collapse after Mt. Gox, and I decided it was a good time to buy just as a trader. I honestly had no idea pretty much what I was buying. And then if you buy a little bit, you buy a little bit more, and then price goes up, and you start to learn, and you learn one thing, you learn another thing. Uh, and it's super interesting to see people going through that because I had the privilege of seeing, a lot of people going through that where they have the first cycle, they really don't get it, they still don't understand it. And then there's something that happens all of a sudden, they start listening to more podcasts, they start understanding a little bit more, start reading a little bit more. And they're the ones telling you, well, maybe I should have much more than I do. And I'm having conversations lately telling people like, hold on, don't sell your house or buy Bitcoin yet. Let's wait, let's see. Don't get emotional in one side or the other, right? But it happens also.
Yeah.
But yeah.
Excellent research, Hafa, the Nakamoto portfolio and what you've done with that. And I mean, that's exactly how you came up with this lump sum. This is all based on research. Due to Bitcoin's explosive upward price movements, the lump sum investing has historically outperformed the DCA, the dollar cost average strategies. And everything is researched back. And that's what I love about when we speak and everything that you talk to us about, and you leave it open for everyone. It's Doc Nakamoto is transparent for everyone. So everyone can go onto the website and they can plug in numbers like you said, and they can test this out for themselves. And I always say that it's Bitcoin, it's study Bitcoin, understand Bitcoin, learn Bitcoin. And it's about not us telling people what it is or what to do, but learning for yourself. And Nakamoto Portfolio does exactly that. People can test it and back test it and find out different scenarios. So thank you so much for that. I love your rat poison one. Do you still have that one up there? The rat
Yeah, it's
poison
still there.
portfolio
It's still there. Although I need to change it because BlackRock,
is now on board.
it's now yeah, they're not they're Bitcoin believers now. So hopefully everybody in that, I'm gonna leave it there so that hopefully come to a point that I'll point and say, yeah, everybody here they all became Bitcoin believers now, right? So
Exactly. I love that. I love your portfolio, the multi-asset. You have the diversified bonds, the gold and gold miners,
yep.
commodity, 60/40 in the all season portfolio. So please tell our audience, thank you so much for everything, but please tell our audience how they can go to Nakamoto Portfolio and how they can find you on Twitter and Swan Bitcoin.
Yeah, so Nakamoto Portfolio is just that. It's nakamotoportfolio.com, super easy. On Twitter, my handle is Alpha A Zeta, so it's Alpha A Zeta, so Alpha Zeta with 2 A's. Always writing stuff there. Yeah, and find me at swan.com as well. There, if you're looking to buy Bitcoin, reach out to us. We're here to help.
Well said. Thank you so much for everything, and always love speaking with you, Hafa. Thank you to the
Thank you. It's a
audience.
pleasure being here. Thank you so much, bro.